Century Plyboards India Limited's Q4 FY26 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head, Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. I'm pleased to welcome you to this financial results conference call on behalf of Century Plyboards and SKP Securities. We have with us Mr. Sanjay Agarwal, MD and CEO, Mr. Keshav Bhajanka, Executive Director, Mrs. Nikita Bansal, Executive Director, along with Mr. Arun Julasaria, Chief Financial Officer, Mr. Navrun Sen, COO, Plywood, Mr. Sumant Vats, CEO, MDF and Particle Board, and Mr. Vishu Goyal, CEO, Laminates. We'll have the opening remarks from Mr. Sanjay Agarwal, followed by a Q&A session. Thank you, and over to you, Mr. Agarwal.
Yeah, thank you, Naveen. Thank you. Good afternoon, everyone, and a very warm welcome to our Q4 and FY25-26 earnings conference call. Before we begin, I would like to remind you that today's discussion may contain forward-looking statements which are subject to risk and uncertainties. This call is not intended as a solicitation to invest. The financial results and investor presentation have already been shared and are available on the stock exchange websites. FY25-26 has been a landmark year for the company, marked by strong growth across businesses, significant improvement in profitability, and continued strengthening of our market position. I am pleased to share that the company reported its highest ever quarterly revenue of 1,492 crores during Q4 FY26. The top line registered a strong growth of 10.5% quarter on quarter and 24.5% year on year, reflecting healthy demand across our product portfolio and improved contribution from newly expanded capacities. At the profitability level, consolidated EBITDA margin, excluding forest losses, improved to 13.6% compared to 12.6% in the previous quarter and 12.1% in the corresponding quarter last year. The improvement was driven by better operating leverage, higher capacity utilization, improved product mix, and our continued cost optimization and operational efficiency. For the full year FY26, the company achieved top-line growth of 19.2%, while EBITDA margin, excluding forest loss, improved significantly to 13% from 11.1% in FY25. In absolute figures, EBITDA, excluding forest loss, has increased from rupees 502 crores to 702 crores. Profit after tax increased by 44% to 268 crores compared to 186 crores in the previous financial year. These results demonstrate not only strong revenue growth but also substantial improvement in the quality of earning and overall business efficiency. Segmental performance. Let me now walk you through the performance of our key business segments. Plywood segment. The plywood business continued to demonstrate sustainable growth momentum supported by healthy demand, strong brand positioning, and distribution expansion. During Q4 FY26, the segment recorded revenue growth of 11.4% quarter on quarter and 17.9% year on year. EBITDA margin excluding forex losses stood at 16.1%. For FY26, the segment delivered revenue growth of 15.6% with EBITDA margin at 15.2%, reflecting strong operational performance and continued market resilience. Laminate segment. The laminate business delivered a turnaround during the year after remaining relatively subdued over the past 1 or 2 years. In Q4 FY26, the segment recorded revenue growth of 8.3% quarter-on-quarter and 16.3% year-on-year, while EBITDA margin improved to 10.3%. For FY26, revenue grew by 13.9%, while EBITDA margin improved significantly to 8.5% compared to 5.2% in FY25. The improvement was driven by better capacity utilization, improved product mix, and efficiency. The next segment, MDF. The MDF business continued its strong growth trajectory, driven by improving utilization levels and sustained demand momentum. During Q4 FY26, the segment recorded revenue growth of 8.9% quarter-on-quarter and 31% year-on-year. EBITDA margin excluding forex losses stood at 11.3%. For FY26, the segment achieved revenue growth of 25.5%, while EBITDA margin improved to 12.7% from 10.1% in the previous year. In the current quarter, we have taken a shutdown in our Budwell plant to increase the capacity by 20%. Particle board segment. The particle board business witnessed robust growth during the year, supported by new capacity addition and improved utilization. In Q4 FY26, revenue grew by 3.9% quarter-on-quarter and 108.3% year-on-year, while EBITDA margin stood at 7.2%. For FY26, the segment recorded revenue growth of 38.2% with EBITDA margin at 1.2%. We expect further improvement in operating performances as utilization levels continue to increase. Century Ports, a wholly owned subsidiary of Century Plyboards India Limited, commenced commercial operation during Q4 FY25-26 at the rejuvenated Khidirpur Docks, KPD 1 West at Shyama Prasad Mukherjee Port, Kolkata. The commissioning marks a strategic diversification into port logistics and infrastructure aimed at enhancing supply chain efficiencies and creating new growth avenues for the group. We will be cash positive in Q1 FY27 from the port business. Financial overview. From a financial perspective, FY26 reflects a year of strong execution, improved profitability, and disciplined growth. Excluding forex losses, ROE improved from 10.6% to 15.2%, while ROCE increased from 12.5% to 14.6%, reflecting stronger operational performance and improved capital efficiency. Our continued focus on operational excellence, prudent capital allocation, and strengthening of brand and distribution capability has enabled us to improve both scale and earning quality. We remain committed to investing in manufacturing excellence, distribution expansion, brand, technology, and sustainable long-term growth. Looking ahead, we remain optimistic about the medium to long-term outlook for the building material and interior infrastructure industry. The sector continues to benefit from strong structural drivers such as rising urbanization, disposable income, etc. With our diversified product portfolio, strong brand equity, expanding distribution network, improving capacity utilization, and additional capex on new capacity across businesses, Century Plyboards remains well positioned to capitalize on the emerging growth opportunities across segments. We also expect further improvement in ROE and ROCE as we continue to sweat the substantial assets that have been created over the last 3 years. During the quarter, the industry witnessed inflationary pressure in certain chemicals and resin-related input costs due to ongoing geopolitical conflicts and supply chain disruptions in global market. However, the company was able to effectively manage the challenges through operational efficiencies, strategic sourcing initiatives, improved product mix, and calibrated pricing actions. Going forward, we will continue to focus on profitable growth, operational excellence, prudent financial management, and sustainable long-term value creation for the stakeholders. We will now open the floor for questions.
Thank you very much. We'll now begin with the question and answer session. Each participant is requested to limit himself or herself to a maximum of 2 questions. Time permitting, we will respond to any further questions that you may have remain unanswered. Participants, you may press star and 1 to ask a question. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Praveen Sahai from PL Capital. Please go ahead.
Yeah, hi sir. Many congratulations for good set of numbers.
Thank you.
Sir, my first question is related to the MDF. There you had given around 39% of a YOI growth in the quarter. Can you make us understand from where such kind of outperformance is coming? Is that the market share you are gaining or the channel expansion? How that's going on? Related to that, at what level of a utilization in the MDF you are running with? And also in this, if you can give some color on the price hike, as you also highlighted related to the chemical price increase. Related to
Yeah,
that.
I think it's already quite a lot of questions. Sumant?
Yes. I think you asked 3 questions. One, I think on the Q-on-Q growth, it's a multitude of factors. Obviously, in March, some stocking does happen because the market was expecting price increases. So that has certainly been one factor, but not the only factor. As we are, aging more in the south, we are continuously expanding our network and also working on the secondary, which is the carpenters and retailers. So it's a mix of, I would say a little bit of year-end stocking, but also a lot of fundamentals playing out in terms of enhanced network and enhanced demand generation. So that's part 1 of your question. I think your part 2 was on capacity utilization. With the current numbers, we're at about 80 to 85% capacity utilization, give or take, for our full capacity. And this is against the rated capacity. And if you look at the product mix, typically you can go up to 85 to 90% as a matched capacity on top of rated. And this is the reason why, as MD mentioned in his opening remark, we're also taking the extension in our south plant, which will add another 60,000-70,000 cubes per year of capacity going forward. On your third question, in terms of price increase, given the disruption in chemicals and supply chain, so on and so forth, we and the industry have taken a 15% price increase, which barely actually covers the cost that has gone up on account of chemicals disruption. It is very early days to see how much of it sticks, and also given the uncertainty right now on supply chain again, we'll have to wait and watch to see, will it sustain? Will we need to take more price increases, or will we need to take some corrections?
Okay. And this time you are not giving a guidance for all the segments for FY27?
Actually, the present situation is so, I think, fluid. It will not be right on our part to give you anything right now, but maybe by next time we will be in a better position to. So till now, whatever we have projected, we have been able to mostly achieve. So the situation is really, and we do not know what will happen to this war, because they have given 60 days for that uranium something. They will again sit down. So it may or may not, the war may again start. So you really don't know what is going to happen. So that's why we are reserving. Otherwise, there is no other reason.
Thank you, sir. I'll come in the queue. All the best.
Thank you. Next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the opportunity. So, so congratulations on a strong set of numbers. I can see in Ply you have announced, multiple expansion, one more new expansion announced. So how should we see, Ply capacity, what numbers in FY27, 28, 29? Give us some sense on that. And secondly, because of this
I will just tell you about the capacities. On the capacity front, actually a lot is happening. Right now, we are utilizing our capacity at practically 100%, you can say. So the way we are growing, so we have to take this chance, and that's why we are expanding our capacities into our existing plants also. And our plant at Hoshiarpur is practically on the. I think Nikita can tell better. Nikita, are you there online?
Yeah, I'm there.
I think you can say better, yeah.
Yeah. So actually in Q4, we had a capacity utilization of about 99%. We are increasing our capacity by about 30% within this year. Part of it is about 20% is with internal plant expansion. And the Hoshiarpur plant is supposed to come up in October this year. So that would make it a 30% expansion. Next year, plan is another. Actually, the UP plant is a bit delayed. So we are looking at. Actually, we had earlier projected that we will be making capex in this year. But it seems because we've just got the land, so I think the capex of the same would start probably towards the end of this year, maybe March, or maybe even Q1 next year, and it will be ready in Q1 28-29. In the meantime, we also have started the process of procuring land in Orissa. Given the way we are expanding, we believe that we will need a new plant, leaving 1 year apart. So if we got Hoshiarpur this year, I need a new plant in 28-29. That's our projection for the next 5 years. That's how we are going about it. In between all years, we are expanding within our existing plants wherever is possible.
Understood. And Chennai will double by Q3 FY27.
Chennai is doubling in July this year. So that is the 20% expansion that I was talking. Not really doubling because it's already taken out a lot of meat within its existing plant. So about 40,000 NE, which is, I don't know, maybe 30,000 or 25,000 CDM will increase in Chennai by July.
Got it. Understood. And this particle board, I can see in the press release you mentioned as the capacity as 240,000. So we can see the real capacity of 72,000. Old plant you are not counting in. So the plan is to completely scrap the old plant, or possibly once this new plant will ramp up, you will start to use the old plant also. And lastly, particle board, this time the capex is 500 crore for 240,000 CPM capacity. Earlier, same plant which you did, the capex was higher at 700 crore. Why is that so?
Yeah, this is Sumant here. Let me answer. The old plant, which is a multi-daylight, slightly older technology, that we have shut down. And as of now, there are no plans to revive it. So we will most likely scrap it. And even if we add future capacity in particle board at a later stage, should the market allow, it will be in a new greenfield capacity. So that's your question number one. Sorry, can you repeat question number two? I forgot.
So I was
What
saying
was the
this time the
second question on
board
particle board?
expansion. This time the particle board expansion cost is 500 crore, while earlier the similar capacity costed you 700 crore.
But we have not taken any particle board expansion earlier. So which one are you referring to? This is our
I'm
first.
talking about the Chennai.
Yeah. So
The Chennai and 240,000, where you incurred 700 crore rupees.
There was no 700 crore. Chennai तो नया plant जो लगाया, that is what we are running now. The earlier plant which we have closed down, so that we are scrapping. So therefore I think we invested some 200 some crores. The first plant.
So what I'm trying,
The old plant was 70 crores. Okay, sir. I think you have got your numbers mixed up. The old plant was an archaic old technology, which was multi-delight press, and hence the capex cost was much lower. This is a continuous production line that the cost will be higher.
No, I'm talking about the Chennai greenfield, which you did particle board expansion of 240,000. That plant costing was around 700 crore. Is this number right?
No, the number is incorrect. The plant costing was about 550 crores.
Okay. So assuming the plant costing was 550 crore, but now the Odisha one which you are doing, which will come out in
Right now, it's just an
FY32.
MOU. It is just an MOU that we have done with the government with very, very rough calculations. It is something that we are still exploring. So Odisha, nothing has been finalized yet.
And Odisha, have we done a MOU for particle board plant or for a plywood plant?
For both, Papa.
For both. Okay.
Yeah. No, so I think if you're comparing the MOU, I think it's a wrong comparison to do, because the MOU right now we have got it with a caveat, if you read, that it could be a MDF or a particle board. We will take a decision when the time comes. And as you know, in India, it takes a little bit time. We are just in the stage of procuring land. And you've seen, like even in the past, when we actually start procuring land, I don't see Odisha going live till another 2 years from now, in like us getting the land. Then all the formalities will start. So I think 2 years from now we can give you a better idea on costs and all the breakup. I hope that clears things.
Understood. Got it. Quite clear. And this MDF AP is already done, the debottlenecking thing for MDF.
Sorry, could you say again? Your voice was not clear.
So they are asking for the debottlenecking.
So MDF, you were increasing capacity by 20-25% for AP plant, which you said in Q1, that is already done and dusted now.
No, that is going on as we speak. In Q1 of this financial year, we are doing a brownfield expansion in our south plant. That will unlock about 60-70,000 cubic meters per year of additional capacity. So that is ongoing currently and will get completed by the end of the quarter.
Got it. Will this have an impact on the sales volume for MDF in this quarter, or you already had the surplus inventory?
Yeah, so we planned for inventory, and hopefully we'll be able to service the market sufficiently with the inventory.
One last question from my side. In ply, you used to import timber. Now, how the geopolitical has been and container rates have increased. So in this way, this will increase your costing for ply timber also. And you are facing any supply side challenges?
Can you repeat it? Sorry, I missed your thing.
So I said in ply, because of geopolitical, the freight rates have increased. So you used to import, timber in ply segment. So is there any supply side challenge, and whether your ply timber costing have increased due to higher freight rates?
Yeah, so actually there is no challenge per se in getting the material, but yes, prices have increased and we have taken a 7% price rise already in the month of April due to these reasons, because we are so import heavy, as well as our chemicals which are imported as well. They too faced a lot of increase. You must be reading about phenol and melamine in the papers anyway.
Got it. That is helpful. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Utkarsh Dapani from Anand Rathi. Please go ahead.
Yeah, hi. Good evening, sir. Yeah, very good. So my first question is regarding your MDF segment. So like on volume side, you are doing pretty good. But on the margin side, if we see, like your margin has come under pressure, which earlier it was not guided. So just wanted to know what is the reason for the margin pressure in the March quarter, and what should be the sustainable margin in this segment as per you, and by when it is likely to be achieved, sir?
Yeah. So if you compare our Q4 versus Q3, there has been a margin erosion of about 1%. A marginal margin erosion. This is on account of two factors. One, some production-related disruptions linked to the chemical availability and prices. And secondly, some one-off spends. So we did a little bit of ATL on the MDF side, which also got hit in quarter four. So that's the reason why you see the 1% margin decline quarter on quarter. I think in terms of steady state, once things stabilize on the chemical side, supply chain side, so on and so forth, our strong belief is that this is a high teens EBITDA business in steady state. And there are two key reasons for it. One, lot of operational improvement on the plant side that we do in regular course is likely to kick in again next year as well. Secondly, with this whole brownfield expansion in the south plant, it gives us efficiencies on power, fuel, so on and so forth. And then a lot of effort is being made just in terms of product mix and value-added products, which we want to push further and further. So in steady state, I think this is a high teens EBITDA business, if not higher. And we hope to achieve it as the next year goes by. I think the specific timeline is very difficult to put right now, given so much is happening globally. But that's our plan and our vision.
Okay. And the second, on the timber side, like what we are hearing is that the timber prices in the local market has corrected by roughly around 10%. So just wanted to know, are you also seeing similar kind of a correction in the local timber prices, and what's the outlook for the timber prices for FY27, sir?
Yeah, so I think if we look at timber as a raw material, and if I compare to the volatility in the year before and the years before that, timber has remained a lot more stable this year. While it's marginally corrected, I won't say corrected by 10%, but it's remained stable. And there are some regular seasonal variations that happen any which way in timber. For example, in monsoon season, the availability is low, so on and so forth. So that happens every year. But by and large, timber as a raw material has remained stable, and we expect it to remain stable going forward.
Okay. And sir, last, if you can just highlight how much price hike we have taken in the other segments, also like plywood, laminate, and particle board in Q4 and in Q1 till date, and what would be our CapEx guidance for FY27 and 28?
So I can answer for particle board, and then I'll hand it over to Nikita maybe for ply. Look, particle board is a very key account management business, and the industry has not really announced any price hike per se, so it's not standard. But the raw material prices on account of chemicals have taken a hit similar to MDF, and our price pass on has also been in the same range.
And I think I have already on the plywood side already mentioned that we have passed on whatever price increases we had so far in April of 7%, but it's a wait and watch scenario. And if we feel that, prices continue to rise, we will take further prices accordingly.
Okay. And madam, what would be the CapEx guidance for 27 and 28 on a consolidated basis?
Vinay, can you answer that at a whole level, company level?
I'll take that. I'll just take that. The basic capex that we are going to incur, the majority of it is going to be towards our new Hoshiarpur plant. Other than that, once we are online with Uttar Pradesh, once the land is in hand, we should be looking at commissioning Uttar Pradesh over the course of the next 2 years. Other than these two, we have no major frozen capexes yet. So the capex will be predominantly directed towards plywood.
Okay, thanks a lot, sir.
Thank you. Next question is from the line of Rahul Agarwal from Ikigai Asset Managers. Please go ahead.
Yeah, hi. Very good evening, sir, to everybody on the call. There's two questions. One is, more longer term, mid-term in terms of strategy. Our operating cash flows every year are about 600-700 crores. Please correct me if I'm wrong. Our capex, total including UP Orissa is 2,000 crores next 4 years, 5 years, roughly about 400-500 crores a year. Most of the heavy lifting on cash flow right now is plywood. 60% of EBITDA is coming from there. So just need to understand your thoughts on how do you manage your risk going forward, right? It's a lot more on execution, which will depend on to fund this capex. Second is at the same time we got to control on our financial leverage on the balance sheet. It's 1,600 crores right now. And third is of course spreading out this capex over 4 or 5 years time, so that the capex which we just finished over the last 2-3 years should actually generate the ROC you want. So how do we play a balancing act here? Could you just explain in terms of your own thought process for the entire business? That's the first question.
Hi, Rahul. I think the way to look at this, we are a company that you've seen has invested when we believe that there is money to be made. But at the same time, for us, turnover is vanity, profit is sanity, and cash is reality. So return on capital is not the most important metrics that we track. Currently, as you have rightly pointed out, we have invested substantially over the course of the past 2 years. And right now, I think it is opportune for us to sweat our assets, to generate returns. We are looking at growth that is not exponential. We are looking at a sustained growth. Towards that, maintaining balance sheet discipline is one of the most important priorities. At this point in time, like I have already mentioned, our priority is going to be in creating capacity for plywood, where we are seeing that we might face a shortage, say 1.5 years from now, due to very strong action on the ground. Other than that, we will take a call on the other segments as and when we reach capacity utilization. There could be stagnancy in a couple of segments where we will not benefit substantially from volume addition for a period of 1 or 2 quarters, maybe from the fag end of next year onwards. But this will be offset by higher realizations and by higher value addition sales. So I think currently there's no frozen capex for MDF or particle board, which are large, substantial capexes. We are going to be using our internal cash flows predominantly to strengthen our balance sheet. And going forward, as and when we take a call, you'll be the first to know.
And I would like to add one more thing to this, that see in plywood, we are not doing unrealistic expansion, because all this while you never saw expansion was because our existing plants had a lot of juice to actually take out. We could really do massive expansion within our plants. We've actually doubled, tripled our capacity within our existing plants over the last 5 to 6 years. But that is now no longer feasible. And because of that, we need to put up new plants, and we are looking at securing raw material sources, because of which we are looking at Orissa or a UP, etc. for future whenever we come back to local timber. And we are taking a very muted growth of 10 to 12% and a capacity utilization of 80%. Basis that, we are planning our expansions.
Right. No, absolutely get it. So just in terms of follow-up, for plywood, Nikita, the base is going to be very high, right? This year you've done exceptionally well. To actually do the heavy lifting next year, you're talking about 10-12% growth for next year is what you're talking about?
Like MD said at the beginning, we don't want to give any numbers for this year. I think in the next call, we will talk about the numbers for this year, what we are expecting. Obviously, you will also see how we performed in Q1 by then.
Sure, I get that. So, just in terms of your own comfort on debt overall level versus if I look at EBITDA, what's the comfort level from a balance sheet console perspective? Right now we are at about 2.5 if you look at debt to EBITDA gross levels.
I think
we should be reasonably assured.
Operating debt or working capital debt is something, because we are growing and we are in a high growth phase. 19% growth year on year for a business like ours does require certain working capital. But long-term debt, I don't think we'll exceed 1:1 EBITDA going forward.
Perfect, got it. And just lastly on Forex, I just wanted to understand, what are these liabilities where, Forex in case INR, devalues substantially in any quarter, which has just happened like that right now. What are these liabilities?
Our total Forex is within 600 crores. Over the course of the past 2 decades, we have benefited substantially because of a natural interest hedge, as you are aware. 1 year, yes, there's been a stark loss. This is predominantly due to the fact that currency is appreciated beyond what anyone could have imagined. Having said that, I think our total forex expenditure, our total forex exposure is 600 crores. It is going to be limited to within that space, which is not going to have a very meaningful impact on our balance sheet going forward. We are not going to increase our forex exposure going forward.
I absolutely understand. What I was asking was, is it part of debt or is it realized or this is mark to market?
No, it is mark to market.
Right. Okay. So this is part of.
It is pure mark to market.
Okay. This is not realized loss. This is largely on liabilities on short-term debt, is it?
No, it is on long-term debt. Majority of it is long-term debt, no, because we have imported machinery in buyer's credit.
That is very clear. Thank you so much and wish you all the best for the next year.
Thank you.
Thank you. Next question is from the line of Sneha from Nuvama Wealth Management. Please go ahead.
Hi, good evening, team, and congrats on great numbers.
Hi.
Hello, sir. Hi.
Thank you.
Just,
Thank you.
just couple of questions, sir. Just first thing, the plywood front.
Sneha, sorry to interrupt you. Sneha, sorry to interrupt. Your audio is breaking. Can you come in a better reception area, please?
Is it better now?
Yes.
Yeah. So I was just asking whether, on the plywood front, whether we have opportunity for outsourcing. If yes, what would be the contribution of outsourcing currently? That's one. Although I understand you said that, for incremental even 10-12%, we need to add growth, but the possibility of the outsourcing front also to get a higher growth, that's first. Secondly, a lot of your peers on the call mentioned that, on MDF front also we have taken price hike, but it's being partially passed on, and due to competition, there are schemes and discounts going on. So just wanted to understand that how much of the raw material cost absorption across the board is done, and could we see any margin impact starting Q1 because of higher inflation?
So let me take the outsource question first, and then Sumant can take the next question. So the thing is, with respect to outsource, I think I've mentioned it in the last call as well, and our mates, that, we want to actually make it a complete 100% in-house production. We are hoping that by the time there is an internal expansion next year, April, and Hoshiarpur, so once Hoshiarpur comes, we will start moving a lot of our Scenic MR, which is the only product we outsource in-house. And by the time we are here next year, we would probably make it 100% in-house.
Got that, Nikita. Thanks. On
the pricing, Sneha, this is Sumant here. Like I mentioned previously, we and the industry have taken a 15% price increase this quarter, and that more or less covers the cost increase on account of supply chain disruptions and the war. You are right. Some peers in the industry have done selective rollbacks on this. So right now it's in a bit of a flux. Given that the global tensions are again at play, we don't know which way the prices will go from here. Also in the market, like you rightly pointed, there have been some rollbacks by a few players here or there. So I think the situation is a bit, we're waiting and watching and see which way it will go. Our hope is that we are able to pass on the cost increase as an industry in terms of prices, and therefore there should be no margin impact. But right now it's wait and watch for us. It's very difficult to say currently.
Got that. Lastly, it is a third and last question from my end, which is related to across the categories. The reason I'm asking this, we've seen significant inflation. In March, there was a lot of channel pushing, be it tiles, be it pipes, be it even your space, like MDF, where the traders or the distributors were expecting price hikes. And that is why they stuffed material in the month of March, and probably because of which April has been slow. Just a sense that I wanted to get, how is May picked out? Are we seeing any scope of, channel recouping and now taking material? Oh, okay.
Yeah, for us, April was not slow. So.
Okay, so that answers.
Yeah, actually was not slow. Yeah. So I want to clarify one more thing, as far as this outsourcing is concerned. See, you know that Century is absolutely into quality. And we have seen that outsourcing in plywood has really not worked as far as the quality is concerned. So that's why we are slowly and as fast as possible, whether I should say, we are trying to withdraw from outsourcing, reduce outsourcing, and do everything in-house. Because the quality is of utmost importance to us.
Got that, sir. That was really helpful. Thanks a lot, team.
And why I am saying so, because next time you build your house, you must buy only Century Ply. Yeah.
Understood, sir. Thank you so much, team, and all the best.
Yeah.
Thank you. Next question is from the line of Shankaran Mehra from Premji Invest. Please go ahead.
Hi, Mr. Mehra.
Hi, thank you for the opportunity. So just an extension to Rahul's question on the overall capex. So on the MDF front, you seem to be running at pretty high capacity utilizations, right? And this debottlenecking probably helps you for growth until next year. So what are the plans beyond that? I mean, if we want to expand capacity there, I'm sure something must be planned by now so that it's commissioned by FY28. So any thoughts there, or would the idea be to focus on more value-added products? How should we think about it?
Keshav, are you there?
Keshav, would you like to take that?
Keshav sir's line dropped. I'll just call him back.
Okay.
Yeah, but meanwhile, maybe I can take a stab at answering while Keshav joins. Look, like Keshav mentioned a couple of questions back, obviously debottlenecking is one area which will give us 60,000-70,000 cubic meters more of capacity this year, and we would like to obviously try to sell it off as quickly as possible. In parallel, move towards value added is certainly very high on the agenda, because that also gives us a bit of uplift. In terms of capacity addition beyond that, nothing is firmed up and nothing is announceable as of now. We're obviously doing our internal brainstorming. Once we're in a position to give you specifics, in terms of timelines and capacity, we'll come back.
With our UP land acquisition, if it happens correctly on time, we'll be ready with the land. And the land is ready, then rest of it is absolutely ready with us. There is no more science to it for us. So we will be able to put up a plant within, say, 15 to 16 months time, I think. But right now, yes, there is nothing absolutely frozen.
And because of plywood, we would actually get the land ready regardless, because we would need the common facilities and more or less the roads, etc. So the land will be ready. If ever MDF decides, it won't take as long a period as it takes for a fresh project.
Understood. So, I mean, just to sort of clarify that it's more a timing or a capex issue, nothing to suggest that the growth opportunities are sort of saturated. I shouldn't be taking that.
No. We are very, very bullish on it. We are very bullish on MDF rather. The capacities are going to expand really big time. A lot of progress is going to come in. These are only, वो क्या बोलते हैं, तूफान के पहले शांति.
Understood.
No, and I think this division will deliver a EBITDA where you all will also get the confidence that we further go into capex. So I think that is also important.
I'm looking forward to that. Thank you and wish you all the best.
Thank you.
Thank you. Next question is from the line of Amit Purohit from Elara Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. Hi, sir. Congratulations on good set of numbers.
Thank you.
Yeah, so just two questions. One on the demand, how are you seeing right now, given the fact that you have taken price increases in most of the segments? And second, when you take price increases, I just wanted to understand how do you, just a bit of a mathematical thing, trying to understand whether this price increases ensures you a percentage margin, or suppose the raw material prices would have gone up by how much in for MDF at an aggregate level, or in plywood, if you could give me, is it a price raw material price increase by 7% and 15% for you, and that's why the amount of price increase has been taken? If you could help me with that.
It's not that complicated. It's very simple. You see, there are very different factors in costing. We have a very efficient costing management system, and very fast we get the calculations that what are our costs going to be in, say, next 1 month time also. So accordingly, we take the price increase, and it is not only raw material timber, because timber is only maybe certain percentage of the whole thing. Then there are chemicals, then there are such inputs, and then there are logistic costs, and then there is a dollar, rupee. So all these things we take into account, and we take the increase. It's much simpler than.
No, so I just want to know, is that what is the raw material index for you increased in MDF and plywood? If you could just tell us that on a YOY basis for you to take 7 and 15% price.
What is the raw material percentage in the total quantity?
Yeah, it's something I personally don't want to share. I think at least for plywood I don't want to share, and I think Sumant would say the same for MDF.
I don't think we should share for all these things.
Yeah, and as far as the demand part goes, I would request Mr. Sen, if he's on the line, he should answer for ply, and then Sumant can answer for MDF.
Navrun, are you there?
Okay. If he's not there, let me take it up.
Yeah.
So the thing is that, whenever we do a price increase, we expect that, things will fall, but we are not seeing any drop in our secondary. So that to me shows that, there might be some holding with the big dealers. But because we have such a wide expansion and we actually run routes on a daily basis when it comes to feeding smaller dealers, I feel that demand is continuing even post the price increase currently for ply.
Sure. Yeah, and I think just to add to that, sorry, you were saying something. Please go ahead.
No, continue, and then I'll just have one small follow-up on that. That's
yeah, no, just a quick addition to that on the MDF side. Look, for us also, demand has been quite stable. Usually April, May, as compared to Q4, of course, there's a little bit of correction that happens from the Q4 exuberance, but in general, we don't see any fundamental weakening of demand. So it's quite stable and healthy.
Sure. And just, sir, I understand you may not like to share the exact percentages, but can you just say whether it is higher or lower versus the price increase that you have taken?
No, it will always be higher, right? The raw material increase will be higher because of the ratio of the raw material to the pricing it's not 100%, right? So obviously the raw material price would be higher, obviously, but we pass on the exact rise. We do not let our EBITDA get hit. That's usually how we work as a company.
Okay.
So I think that answers the question. You're trying to ask, are we trying to get more margin from the price increase, or are we just covering our cost? I think Nikita answered. The philosophy is to pass on as much as cost as possible. So that's the intent.
Sure. Thank you so much. Thanks.
Thank you. Next question is from the line of Bhavin Rupani from Investec India. Please go ahead.
Yeah, hi. Thanks for the opportunity.
Yeah.
Sir.
Yeah.
So first question related to plywood. So last quarter we said 8% of our total revenue in plywood is with respect to Scenic MR. So first, if you can tell us what is it in terms of volume. And second, now we plan to bring in Scenic MR in-house. So does it mean that volume growth won't be commensurate to capacity growth going ahead? So is that a fair understanding?
Okay, let me answer it in two ways. Number one, we do not share breakup of Scenic MR and Scenic 710 and Club Prime. We've maintained this in the past, so I will not answer that question. With respect to the second part, yes, so if you say in terms of the growth, the capacity expansion that is happening is quite aggressive at a smaller timeline. So if you see, if we've added 30% just this year, and then we are adding another further 15% next year, is all to actually take up some part of this 8%. Obviously, we are not going to grow by 45% in this 1.5 years. Yes.
All right.
I hope that answers your question.
Yes, it does. So, just to follow up on this, if you can call out what is the capacity right now in plywood and what will be our capacity post we are done with all the capex that we have announced in FY27?
Where will you take up those exact numbers, please?
Sure. So current capacity in case of plywood is 4,06,000. This is as on 31st.
Sir, sorry to interrupt you. You're sounding distant.
Am I audible now?
Yes, sir.
Yeah. So current capacity at plywood is 4,06,000 as on March 26. And we are coming up with new capacity of Hoshiarpur, which is 48,000 CBM, which is going to come up in the second half of this year. Apart from that, we are having brownfield expansion at our different factories, which is Kandla, Chennai, and Guwahati, which will add another 20% of this particular capacity, which Ankita has already told us. I hope I'm
20% of total capacity is 80,000? 4 lakh?
Yes. To brownfield.
Got it. So second question related to Century Port. So we have done expense of somewhere around 260 to 70 crores over 3 years. So just wanted to understand what could be the potential cost saving we can expect from this.
Hello.
What do you mean by cost saving for Century Ply?
Yes.
Cost
saving or incremental. Yeah, cost saving or incremental revenue.
Cost saving for Century Ply. No, there is no cost saving in this. Actually, there is it makes life easier for many importers and exporters. So to us also, but there is no cost saving for Century Ply in this.
We always maintain each thing as a separate profit center. So Century Ports will continue to have its own profit center and give no benefit to Century Ply as a group.
All right. Thank you so much.
Participants, kindly limit yourself to 2 questions per participant and rejoin for a follow-up. Next question is from the line of Mehul Shah from NMB Securities. Please go ahead.
Hello, sir. Sir, I wanted to know the current capacity for laminates.
Current capacity for laminates.
And utilization.
So our capacity utilization is at 84%, and our capacity is 87,70,000 sheets.
87,70,000.
87,70,000 sheets. And
this is consolidated, right? Consolidated.
Right? The LAM Budwell capacity is 11,200 CBM. These are 2 different kinds of numbers because there the number was number of seats, 87,70,000 number of seats. Here it is CBM because here we make a different kind of laminate actually. It's a thicker laminate which is mostly for exports or for use in toilet cubicles and all that.
Okay.
So the capacity utilization at Budwell is 47%.
And what would be the capacity for 27 and 28?
Capacity for 27-28. Same.
Yeah. Okay.
So like we said, we will give those numbers in the next call because if I talk about capacity utilization, I will also end up talking about what is my plan for this year. So we will give that in the next call.
And capacity पूछा ना तो capacity इसको जो है
नहीं he's asking capacity utilization percentage for this year.
And for MDF capacity is 5,28,000, right? Current.
So for MDF, the current capacity is about 540,000 CBM per year, and with the brownfield expansion, we'll add another 60 to 70,000. So we'll be give or take 6 lakhs cubes a year.
Okay, sir. Thank you.
Thank you. Next question is from the line of Anu Parak from Anand Rathi. Please go ahead.
Yeah. Hi, sir. So first question is, what is the reason for weak performance in the laminate segment for the 18 quarters, and by when can we expect it to start performing?
Vishnu, you have?
Yeah. I can answer that. So Vishnu will decide. So I think there are two parts to the question. Okay. In the last, if you were to look at the preceding, 8 quarters, which is FY24-25 and 23-24, okay, we had seen a certain amount of stagnancy as far as the laminate business is concerned, partially because of some internal changes in the context of how we wanted to take up the GTM level changes, which probably have not worked to our advantage, and partially also because of the changing product mix when you look at Indian as well as both export markets. So we took some corrective actions starting last year only. And if you were to look at this year, we have started seeing some green shoots as far as the financial year 25-26 is concerned. So on a quarter-on-quarter basis, we have seen an uptick as far as the overall top line as well as the improvement on the bottom line is concerned, which essentially has come through the work which we've done both in the domestic